Hey friends, welcome back to another episode of Making Sense of Your Markets. Today is Friday, it's April 29th, 2022. This month just flew by. Great message for you today. I hope you listen to this and I hope you turn off CNN, Fox, whatever news channel you're watching. I'm seeing so much garbage and just bad information. Fear. They're selling fear right now. They're selling foreclosures are up. We're heading into a recession. All of this stuff, and it's generated to breed fear in Americans. And there's nothing to be afraid of right now, especially if you're a home buyer, especially if you're a homeowner. At the end of the day, if you start losing your job or there's massive layoffs or unemployment rates go to 15 or 20%, yeah, there's some fear, there's something to be afraid of. There's nothing to be afraid of right now. And instead, I would congregate toward people that are sharing information like me, data, economic data. Today, I want to talk about recessions and what a recession means to housing. So a guy like me, I'm 45. During the 2007 and 2008, 9, 10 recession, I was a young adult. I was a young father, a young husband, starting a new career in the mortgage industry. And so I had a lot to be afraid of because I saw everyone losing their houses and everyone losing money. I didn't have a whole lot to lose at that time. In fact, I had everything to gain. And so I wasn't super afraid back then, but I was nervous from what I was hearing and what I was seeing and experiencing. Now, when I hear the word recession, it automatically takes me back to 2008 from my personal experience. But what I didn't realize is there was a recession in the early 2000s, which I don't even remember, a recession in the 90s and the 80s, which I don't even remember. Those are the recessions that we need to focus on. And so what I'm going to do today is I'm going to explain to you what mortgage rates do during recessions, what the housing markets do during recessions, and it's going to calm your nerves. Because when you're going to hear the word recession, I want you to think saving money. That's what recessions do to Americans. Recessions is a great time to buy real estate, a great time to invest in the stock market. Now, we're seeing massive inflation right now. So money, your dollar doesn't go as far when the cost for things are so high. We're going to see that come down. And if you study inflation, high inflation leads to recessions. Recessions lead to cheap money. Okay, so let's talk about that today. But every single week, I try to bring you a mortgage rate update. Are rates up or down week over week? We're going to talk about that. And then I try to bring you some information. See, this is a 52-week series on the best-selling self-improvement book, The 7 Habits of Highly Effective People. We're on week 41. We're almost done. It's taken us a full year. We're almost done with this. Great message this week. I always spend about 30 seconds at the end on that. So mortgage rates week over week, are we up or are we down? We're down just a little. We saw kind of the market level off and then improve just a little. We're still above 5%. So 30-year fixed rates are at about 5 to 5.25 right now, depending on your credit score and down payment and type of property. So I want you to reach out to me for a rate update if you have any questions there. The housing market is still crazy. I talk to realtors 100 times a week and they're still seeing multiple offers on homes. And so these rates right now in the low fives aren't spooking buyers. I keep telling people I think if you get closer to 6, I think you'll see a big slowdown in the real estate market. But for right now, housing market is still on fire. All right, so let's talk about recession and something I've been talking about at the beginning of COVID, I talked about it. In 2019, I did a 4-part series on how to recession-proof your life. And I started with your life and your home, your career, and all of that stuff. There's no doubt that the federal government cannot continue to spend money without us eventually going into a recession. It's due, it's going to happen. Right now we're seeing massive inflation, but on Thursday, we saw GDP come in, the gross domestic product. It's one of the top indicators relative to the strength of our economy. We saw GDP come in low. That's an indication of a recession. We also have seen the 2-year and the 10-year Treasury note. We've seen an inverted yield curve. That also is a great predictor of a recession. So I want to share some information with you. Go and Google the 10-year Treasury, the 2-year Treasury, and if the 2-year Treasury is higher than the 10-year, that means that we have an inverted yield curve. We saw that happen for the first time in April of 2022. There's some data here that I'm going to share with you that shows that every time we've seen an inverted, or a lot of the times when we see an inverted yield curve, about 15 to 19 months later, we hit a recession. So a recession is coming, whether it's now or it's coming a year, a half a year, or a year from now, it's coming. Here are some things that I want you to focus on when that happens. Mortgage rates per this chart, this graph that I'm going to show you, these gray lines are recessions. Look what happens to mortgage rates during recessions. They drop. This other chart that I'm going to show you is the housing market, the Case-Shiller U.S. National House Price Index. Look at this. Those dark lines are recessions. What do home values do during recessions? They increase. So mortgage rates drop, home values continue to increase. All is good if you're a home buyer or a home owner. And those are my clients, those are my friends. The people watching this either want to buy a home or they own a home. So great news for you there. If you have any questions on this, I want you to reach out to me. Don't listen to the news. They're there to broadcast fear, to trigger fear, to get you to be either fearful or make decisions out of fear, and you never want to make a decision out of fear. Okay? So let's close with week 41. Seek third alternatives. All this means is to seek synergy. 2 is better than 1, 3 is better than 2 relative to getting stuff done. So I want to read this to you. Synergy depends on the willingness to seek third alternative. More than just my way or your way, it's a higher, a better way. It's something that neither of us would have come up with on our own. What is synergy? It's simple. It means that whole is greater than the sum of its parts. Synergy means that 1 + 1 may equal 10. You can get more done with help and with synergy. Reach out to me if you would like some synergy relative to your finances or your mortgage. I'd love to be a resource. Share this if you found it valuable. Have a great weekend, and we'll see you next week, okay? Bye for now.